Hey everyone, this is Robert Keens with goldsilverpros.com. Today we're going to be looking at volcanogenic massive sulfide deposits, also called VMS, and how important they are to the mining industry. VMS supply a lot of the world's base metals as well as the precious metals, and these VMS deposits are becoming more and more popular, particularly in North America. And we'll be reviewing a company up in Canada that has several VMS projects that are advancing to mid to late stage, and we'll be supplying a lot of base and precious metals in the future. As you can see behind me in the background, we have a picture of zinc. Zinc and lead and gold and silver and copper are often found in these polymetallic VMS deposits. Zinc, of course, is extremely important to the worldwide economy. It's important to the space economy. It's important to key green technologies and battery-operated vehicles or battery-powered vehicles, as well as for health. For example, on use as a preventative for upper respiratory infections. So let's get started on the presentation. Today, we're going to be talking about Callinex mines. They trade on the TSX Venture under CNX and on the over-the-counter here in the US under CLLXF. Right now, they're about a 31.2 million Canadian company that is looking at, as explored and is looking at mining some of these VMS deposits that are so important. We have discussed how important sulfide is to finding large quality of base and precious metals. I know I've talked about this in recent episodes as we've been going through our Explorer series. Sulfide deposits are often a way to find precious metals, but they're also a way to find base metals such as lead, zinc, and copper. These polymetallic deposits often contain zinc, copper, lead, gold, and silver all together. There are 350 such deposits in major VMS occurrences in Canada. Most of those deposits occur in clusters that define major mining districts, such as Flin Flon and Bathurst. And the company that we're going to be looking at today, Callinex, has projects near Flin Flon and Bathurst as well. And these projects are important because they start at or near the surface typically, which means you can do these big open pit mines or near surface mines. It's a little bit cheaper to mine, so you tend to get a little bit better return for your money. Volcanic sulfides are important. As we can see, we have a quote from the Treatise on Geochemistry. Volcanogenic massive sulfide deposits, together with their close analogs, have accounted for more than half of global production of both zinc and lead, 7% of copper, and a significant amount of silver, gold, and other byproduct metals. So as we can see, these VMSs are very important, so we want to pay attention to them, especially in premier mining districts like Canada, where it's easier to get the mine permits and they're friendly districts for the miners. So how do these sulfide deposits work? Well, basically you have this magma chamber. The magma lifts up in a volcano, it comes up to the surface, spreads around the volcano, and creates these bedded sulfide deposits you see here on this picture. And within those sulfide deposits, you're going to have your copper, your zincs, your leads, and your precious metals, which often accompany this. You can see the bedded sulfides are on top, so it's easier to get to. You don't have to dig down into the magma chamber to get them, or down, several thousand meters. You basically can get them right off the top, and so they become these big open pit mine or near surface mines. Callinex has three projects in three critical locations here in Canada, including Flin Flon and Bathurst, which, as we know, are two of the biggest VMS metal producing deposits in Canada. They also have one in Buchan's in Newfoundland. We're going to start off by looking at a couple of their projects. They have more projects than what I will talk about here, but these are more near term or have a PEA associated with them, so we have more information. The first one is Nash Creek. There's a 2018 preliminary economic assessment, which outlined a 10-year, 3,900 ton per day open pit mining operation using dense media separation and a 1,950 ton per day conventional flotation mill. These are typical types of technologies used in mines. We've seen these used silver, for example, down at Impact Silver in Mexico. The indicated resource contains 963 million pounds of zinc equivalent within 13.6 million tons, grading 3.2% zinc, and an inferred resource of another 407 million pounds of zinc equivalent. And that includes, of course, copper, lead, gold, and silver. The cool thing about Nash Creek is it's literally right on top of world-class infrastructure. You have access to a seaport. You have access to conventional roads and electricity and everything's already built up here at Nash Creek. And this is a district scale land package, 118 square kilometers. The deposit itself extends 2 kilometers in either direction, it's open on either direction. So in addition to what this PEA has outlined, there is some additional exploration potential here as well. We're also going to look at the PEA results. They looked at 14.4 million tons at 3.7%. Pre-production capex to get the mine running is about 168 million. That pays back after they're just under 3 years. It's got a 34% pre-tax and 25% after-tax internal rate of return, which is really good. Now, Bathurst is one of these traditionally very powerful deposits, one of the two most powerful VMS deposits here in Canada. And Callinex basically has a project right there. So it's right next to infrastructure. It's right in the area you want to see these district scale projects, and the PEA was very favorable. We'll look next at the Point Leamington project. It has an historical inferred mineral resource of 14.1 million tons, grading 6.2% zinc, including 1.86% zinc, over a gram per ton gold, 7.2 grams per ton silver, and 0.42% copper, 577 million pounds of zinc, 484,000 ounces of gold, 7.7 million ounces of silver, and 130 million pounds of copper. The great thing about these polymetallic deposits is when you have the base and the precious metals going up, it's very bullish for the company. We'll get into how zinc's price has been doing in 2020 and why we think zinc is going to continue to do very well in 2021 as well. Of course, we also know about gold and silver. We talk about that all the time. We're expecting really big bull markets in both of the precious metals. This project is in the advanced permitting stage with resource contained within a current mining lease. It has high-grade mineralization open at depth with assays including 4.67 meters of 15.1% zinc, 4.4 grams per ton gold, 57.9 grams per ton silver, and 0.36% copper. Getting into the zinc prices for 2020, we can see that zinc has done very well, rising from a base of about 1750 to getting over 2750. It's done very well in 2020, as we're going to see here in a moment. The experts, a lot of analysts are predicting that zinc is going to continue to do well into 2021. Part of the reason is you had a major project coming online, which is going to mine 250,000 tons per year. That got stopped due to an issue at the mine, and that has reduced the overall supplies, as well as some issues with shutdowns in various districts and the refining capacity in China and in Europe as well. So all of that has led to less overall supply of zinc, and that's caused the price to rise. Of course, that is bullish for all zinc miners, whether you're in the exploration or the production stage, either one, because the zinc price goes up. And as the zinc price goes up, so too do companies that have good zinc deposits. Some of the experts go on to say the concentrates market is likely to remain tight in 2021, exacerbated by longer than expected outage at Gamsberg, which is the mine that I was talking about. Cochran said prices have possibly run ahead of the refined market fundamentals. He thinks that concentrate market will remain tight through at least the first half of 2021, along for the potential Chinese smelter cuts will be a neat mechanism to support prices and drag much of the excess refined surplus in Europe into China. High zinc prices and low TCs suggest a relative windfall is in the cards for zinc concentrate suppliers. So this is bullish for Callinex as well as everybody that has a sizable amount of zinc. Of course, we also know copper has done very well. It recently reached 7-year high in prices, and then gold and silver are in established bull markets as well. So basically all of the products and byproducts that Callinex is looking to mine are all doing extremely well price-wise for 2020 and expected to continue to do well in 2021. Share price performance for Callinex has done very well this year. We see a 1-year chart. It's gone up from just over a half a dollar Canadian to about the 247 range, currently trading about 222. So it's done very well. Part of that has to do with the overall valuation of the zinc prices going up, as well as the other metals, gold, silver, and copper. But also it has to do with their discoveries and their continued work on their projects. They have high quality projects. And as we'll see here in a moment, they have a really good management team. All of those added together in Callinex has returned very well for its investors over the past year. It's doing very, very well. The share structure is very, very tight. It's one of the things I like about this company. Very good overall share structure. 28% is owned by management and associates, 21% institutional and family offices. The rest are owned, the shares are owned by retail investors. Enterprise value about 32 to 35 million. They have no debt. They have about 560,000 in cash. They only have 11 million shares outstanding. That's outstanding for a company trading over $2 Canadian with the advanced exploration stage projects that they have and the PEAs that they have. They have about an extra 1.28 million options and 355,000 warrants. That's not much overall considering their dilution and considering they have zero debt. This Explorer is very well positioned going forward in terms of share price appreciation for its investors. They have an award-winning team. There are 3 awards won here by some of their geologists and advisors. Mike Muslowski has been involved in the discovery of 12 VMS mines in the Fin Flan district in which Callinex has a project. James Pickle, geologist, has over 40 years of VMS exploration experience. J.J. O'Donnell has 25 years of VMS exploration experience. Alan Vowles has 35 years of VMS exploration experience. And the president, Max Porterfield, has 15 years of experience in national resources and financial markets, previously with Brazil Resources, Uranium Energy Corp, and U.S. Global Investors. So this is an award-winning, very experienced team that has good financial experience, and that is reflected in their share structure. You can see it's very tight and very well done for their investors. They also have a ton of exploration experience, and they're sitting right there in the best Canadian zones for VMS deposits. I believe that's why they have done so well this year. Wanted to bring this to you guys. I've been talking the last 6 months about getting into exploration plays. Why? Because a lot of the precious metals, the gold and silver in particular, we're going to go off that cliff in 2030 where we don't have as much proven probable reserves. And so we need to continue to find some. We've also seen that the entire resource sector has been suffering from a lack of overall investment. We haven't had the dollars coming in. It peaked in 2011, right at the time where the gold price peaked. We showed that in our last video last Monday. And what that means is we don't have the investment going in so that the explorers and the developers can develop their mines and go exploring for new deposits. The CapEx is down since 2011. So we're going to need a lot more CapEx coming into the mining industry. In order to do that, we have to support these exploration and development plays. Callinex is one such play. I like them because they have access to the precious metals, but also to a critical battery and green metal in zinc, which over the next year has a really solid growth price potential and profile and is critical in the space race. It's critical in the space race. It's critical for the technology industry. Zinc is very critical. So I think it's mining the types of metals that we need. Of course, they have some exposure to copper as well. That can't hurt with copper recently hitting 7-year high. So I think this company is very well positioned going into 2021. Of course, it had that great share price performance as we saw on the Yahoo Finance chart for 2020. Given the fact that we expect here the zinc, gold, and silver prices to continue to rise and copper to continue to stay strong, I think Callinex is going to have plenty of runway on its overall share price. They're very tight on their overall financial structure. Of course, they're going to have another capital raise to continue their discovery and eventually to build the mine, but they've been so tight on their share structure that I don't think it's going to overall affect the price too much. And they have such a great management and exploration team. This looks like a really, really, really solid potential for you guys if you're looking to get an exploration and development and to diversify your portfolio overall a little bit, not only the precious metals, but into a critical battery and space and technology edge metal in zinc. That's going to do it for today, guys. Appreciate it. Until next time, this is Rob Keynes at goldsilverpros.com.